Hey guys, good morning. It is a little after 10 on Saturday, January 2nd. Happy New Year 2021. I think NIO is going to be an interesting stock. There's a couple things I like about NIO and a couple things that I didn't like recently that have turned a little bit more positive for me technically on NIO. And when it was up in the 49.50 area, I thought that it was looking a little suspect and needed a pullback to consolidate some of the gains that it's had. And that's exactly what happened. I was short. I covered. I believe I was in the 43s or 44s. My target was low 43s, and I think we got into the 42s. So it's completed that downward cycle. The thing that I do like about NEO is a couple things here, and I'm going to tell you. Number one, I like the position of the MACD here for the longer term. At the trough area here, which means there's a lot of room for expansion on the upper end once you consolidate the lower, shorter time frames. So that's a great spot to be in. That's kind of the stuff that we see here, but it's a little bit more extreme since we've had a wider move. And in those wider moves, you also see some in and outs of the 20-day, which isn't so bad. At the very beginning of this longer term move or any intermediate term move, you'll see some bouncing off the 20. That's normal. But then once you get that big extended move, like we had there, the double, the 70-80% move from the low in here all the way up to 57, you're going to have a little bit more of a wilder swing on the pullback. I think the last move that we saw was really interesting in NEO, showing the ability to get above the old high, but then pulling back, and I'll tell you why I think it pulled back. But it's also holding my 45-day moving average. I don't use a 50-day on some of these stocks because they're first of all they haven't traded so long, so I don't think we need to extrapolate out some of the longer term time frames like the 200-day moving average. You can see if I edit this to a 50, you don't really get a touch on the moving average. Instead, you kind of get an area where it pulls up before there. Notice how we don't even get to that, but when we edit it, which I've been using for a lot of stocks for years, you'll see a little bit cleaner look there, a couple touches along there. The interesting thing about NEO too is on the shorter time frame, and obviously let me go into this reason that I think it broke back down here is because you have a very structured channel in here with touches on the bottom. You have a touch here on the daily, and then a touch here, and this is your candle where you kind of break that channel line support. So I do think this candle is going to pose a problem, and once we get into that candle, which we did here and we did here, you're going to start to see sellers come out. So obviously our horizontal resistance for now will be 52.11, but what happens as those continue to release pressure and you get sellers like we saw on the last trading day where we started to push higher, then we kind of sold off a little bit late into the day. It's actually healthy for the stock to get those sellers out of the way because after 3 or 4 tries of hitting that area, those sellers are now gone and you're going to get an explosion to the upside. So that's the positives I like. I love how it's holding this 45-day moving average. Every time we get there, you have energy off of that area, energy off that area, energy off that area. So you have these nice legs up. I just think you need to consolidate and digest this big move that we've seen. So if we switch from daily to intraday, let's say 30-day, hourly, we can get a little bit different look at the MACD on the bottom. And here's where the concerning, not concerning, but you have to be a little bit more cautious here. If you're a buy and hold, I think you can still scalp intraday. But you can see peak to trough, there's a very defined MACD line on top here. And every time we've kind of hit these little high areas here, here, and here, we've had pullbacks, and they've been fairly consistent that over time they kind of work their way lower. But the healthy part is this bottom area is continuing to show higher lows. So this is more of a bull pattern than anything. It just means that the shorter time frame needs to consolidate once again before we get a bigger, more extended move to the upside, as opposed to something like QuantumScape, which went parabolic and then sold off precipitously. This is actually a more healthy move in NEO. So any of those guys that gave me a thumbs down for thinking that it was going to go down when it was up around 49 or 50, I guess you guys will be happy to kind of see that these are healthy moves. Now we move to a 20-minute time frame, and once again, holding the positive side of the MACD and then curling once again would be fantastic if we get that. If not, we're just going to pull back and probably consolidate at a little bit lower level, probably somewhere around the 47 area, 46 area. but once again, not a big deal. And then we move to the shorter time frame. If we look at like a 10-day, and then we'll look at like a 10-minute on the 10-day, you can kind of see that we are kind of breaking through the negative side, and we're trying to push back through positive on the MACD here. And that would also be a positive if we can kind of consolidate these gains we've seen over the last few days and get a nice move to the upside. And then if we step back and kind of look at it on a 20-day, 20-minute time frame, you can see on the Fibonacci retracement from the high to the low, once again, nothing extraordinarily negative here at all. We had a move from, what was it? We got up into the 52, I think. But the big move here was the 49 and change down to here was the big pullback that we had from this nice move up. So if we look at a Fibonacci retracement on there, you can see the 49 down to like the 42 area. And I might have been wrong on the price target. Yeah, I did say 43 and change is what I was looking for. So it definitely completed that cycle. And now we can kind of load up and see the 20-minute candles. And you can kind of see that there's nothing unhealthy here. You can kind of see that we kind of bounce back up to the 61.8, and then you get the completed move down to the bottom here. And then you can see every time we kind of hit at 38.2 area, you have a little agitation. You pull up and you have a little bit of consolidation on the 61.8. They defend the 50% move. And then you kind of have another little area of consolidation on the 78.6. And then we get to the top. And obviously we have the resistance from the candle that we spoke about. So would it be shocking to see it pull back to the 61.8 around 47? Not at all. But for longer term traders, this looks healthy here. In fact, I might take a small position in NIO within this area here that we're looking at, and then maybe add on the way down for a longer term hold, because it's showing some interesting longer term patterns here. Once again, this one's kind of curling off the MACD, and I don't want to miss a potential move here. I'll just have a smaller position because I do see the ability for this to continue to go lower, like we showed on the hourly time frame. So short-term consolidation in NIO needed. I think I spoke about that on the last video. Still needs a little bit more time. Shorter term, it's kind of positive though what we see here, but longer term it still looks interesting and healthy here. It just looks like it needs a little bit more time to consolidate these moves and to get those sellers out of that higher candle area. So I do like NIO here. On the intermediate term, I wouldn't want to see it close below 46. I don't think that'll happen, but just keep that in mind. That's not a huge drop from here whatsoever, so don't be freaked out if NIO kind of pulls back in that area. And you can kind of see in pre-market in the last few days, it's kind of seen some areas of consolidation there. And then now we're pushing higher. So NIO looks healthy to me, intermediate, longer term. I just think it needs a little bit more time here.